Alright guys, we are here on the daily time frame of EUR/USD and I'm gonna discuss one swing trading opportunity to the downside. So before I go ahead and discuss the swing trading opportunity or any other trading opportunity on any other time frame, let me make you understand a brief economic analysis which is supporting this idea. So the economic analysis which is supporting this idea is all about the tariff war, or you can say trade war. So I will take you to the 4 hour time frame and I will show you what happened there on 4 hour. So if you see this down moving blue channel, it was the downtrend in EUR/USD, and something happened in the weekend. Trump spoke about imposing tariff on the European Union, and then Euro opened with a huge gap to the downside in the following week. And market has the tendency to fill the gap. So market came back, filled the gap, and not only it filled the gap, it actually extended the move further to the upside before continuation to the downside. So it was a natural phenomenon in the market to continue to the downside, and then this red one, the red channel is showing the continuation. So basically if we just consider this channel, it will be like ABCD kind of move to the downside, and market again retraced to the upside and came down with a faster speed because of higher inflation data from the US. So the overall economic scenario for the euro is not much driving to any direction because none of the tariffs have been imposed by Donald Trump administration to onto the European Union, and neither Europe imposed any tariff as the retaliation. So whatever trade war was anticipated has been kind of suppressed because of a news in the market that they are going to negotiate and come up with agreeable uh, outcome rather than imposing tariffs on each other, which is why Euro/USD started going up after this move to the downside following the release of inflation data from the US. Otherwise, it could have continued right from here. You can see this point. So, market actually priced in the positivity that they will sit on the negotiating table and they will make a deal about the tariff. When I say tariff, I mean the extra taxes applied on the imports. So this is the term popularly used in international export and import. Anyway, coming back to the chart, so the upward move already shows that the whole uh, I mean, even though there is no negotiation, there is no such agreement, neither tariffs have been imposed nor any uh, negotiation or any mutually agreeable outcome has come out yet. Market has been pricing in just the rumors or whatever is the anticipation, whichever is causing the sentiment. So sentiment is not strong enough to further drive the market to any direction, to upward direction, and that is why I can see that the market seems to be going down and seems to be taking a break here. Similar breaks were already identified, however this is slightly different this time because this is making a double top pattern, because this is left top, this is the right top. If I take you back to the daily time frame, you will understand it better. So this was the previous top and this looks like a second top. Market has not broken above the top now, which is why it looks more bearish. And since there is no clear outcome economically about the trade war, we cannot say that there is a driving factor for euro to the upside. It doesn't look to be further accelerating to the upside just because of the anticipation of a mutually agreeable outcome from the negotiating table. We do not know yet what's gonna happen, when it's gonna happen, and what exactly what kind of outcome it will what kind of outcome the market will receive. So anyway, we do not have anything about the tariff situation now. Another thing is economic data. So economic data recently coming from the US were all positive. And when I say positive, I mean to say they actually beat the expectation. When I said they beat the expectation or positive, I mean to say that you need to compare the forecast not only with the actual release, but also you need to look at the revision in the previous releases. This is how you'll understand the overall effect of any release. Any release. So whether we look at the non-farm payroll, or we look at hourly earning, or inflation, or PPI, and if we look at both things like revision and the actual release, we will understand that the overall all of these data were positive, except for the retail sales. So overall scenario for the US economy seems to be stronger than the European Union, and there is no clarity about what's going to happen in terms of tariff, which is why I do not see any driving factor, economic driving factor for the Euro USD to advance to the upside anymore. And that's why this double top pattern can still be formed and market can return to the downside and can be trading in this range, something between 1.02 and 1.05. So this is the ideology, fundamental ideology based on all these economic observations. Now let's come to 4 hour time frame and try to understand what we have technically. So technically, if we look at the very recent move to the upside, it looks like a harmonic pattern A, B, C, D, which exactly, which is pretty accurate. If we measure the distance, it is accurate. I'll show you. So this was the length of AB move to the upside, and this is the length of CD move to the upside, which is almost equal. See, this is the point of the completion of this swing. I am assuming that this swing has been completed and assuming a downtrend. So ABCD or any harmonic pattern has its effect on the market. So what we are expecting here is a similar downward move like the CD. So in case of this ABCD, this was the CD. So similar move to the downside can be expected here, which probably is around 1520 points. I'm going to target 1520 points. However, I will definitely check whether or not I am getting something similar to what I am putting on the risk. So let's understand what we are going to put on the risk. Since this is a swing trade, we are not going to set any stop loss immediately because we do not have any economic data coming on Monday or Tuesday, which is a good as well as bad sign. The good sign is there can be a temporary effect in the market. Bad sign is that temporary effect can take your stop loss, which is why we shouldn't put any stop loss, and we should rather wait for closing of any daily candle above previous high to say that this setup failed. So let's say any candle closes above this one, and then we have to take the loss. So in this case, our loss will be something around, let's measure the distance from here to the upside. So this is not a big deal, it's 33.2 pips, or you can say 332 points. However, this is not the only risk you are taking, because you're gonna wait for closing of the day, and closing may happen many pips above this. So let's say 600 points. That is what we are going to put on the risk. And to the downside, we have a room of 1520 points. So we can easily have a better reward here compared to the risk. So this is what we always look for in swing trading. And swing trading is a style where we get such kind of opportunities where our reward can be always bigger than our risk, or we anyway can get equal reward. So we can make plan according to further development on Monday and Tuesday, whether we are going to extend our reward to 1500 points or 1000 points, or what we are going to do. It will depend on the further development that we will see in the market, the price development, as well as if there is any news or data coming. There is no pre-scheduled data. However, any news related to this tariff can come in the market. So this is about the swing trading plan. Now let's go to the 1 hour time frame. There is a scalping plan which people can take advantage of if they are scalpers. However, we do not personally go for scalping. So there is a pattern here which looks like evening doji star. This is a bullish candle. This one is a doji candle. Let me zoom a little bit so that you will understand better. So this is bullish candle, this is the doji candle, and bearish candle has closed below the midpoint of this big bullish candle, which is why this is justified, or you can say accurate evening star. Market already followed to the downside, however it didn't complete the target of the candle pattern. Usually a candle pattern like this has similar target, similar as the length of this whole pattern. So length is something around 263 to 62 points. So the target to the downside can also be the same, 263. So it will come around 10460, 1.0460. Market didn't go there yet, and market is now trading at this price level, and we can open a sell position, or the people who open sell position already, they can continue with the sell position. You can set your stop loss slightly above this high, maybe 25 points or something like that, just to cover your spreads and to be to have the stop loss at least like 5-10 points above it. So 5 or 10 points is what you are going to add, because this is what you want in the stop loss. You want your stop loss 5-10 points above this high. So 5-10 points plus this plus the spread. So it may be 25 points, 30 points, whatever should be a SL. Excuse me. So that is that is this scalper plan. But scalper plans are always less fruitful than the swing trading plan. I don't see any huge reward here, unless I go back to the swing trading plan, and there are high chances that the market will go up and touch your SL. If you go for a scalping style, and you will talk about a risk of 600 point, which I have already spoken about on by comparing the total risk on 4-hour time frame. In case we are not going to put set any SL, and we are going to wait for the daily closer. So if we look at that, and we just consider that the 600 points is going to be our risk, I do not see scalping opportunity of 600 point to the downside from here. Till this point we have only 430, and scalping is about taking advantage of the smallest swing. Even if trend is not going to change, we can still take advantage of minor retracement. We can take the profit and exit from the market within matter of minutes or hours. So that's why we should not expect market to go below this in case we are going for the scalping. That's why we do not see a very good reward in case of scalping. However, it is your choice whether you want to trade both styles, and or you can open multiple position using our multi-position trading formula. So what you can do is you can go to our website 25noobsters.com, and so I'll tell you what you have to do. So this is what you need to do: 25noobsters.com. Then go to the site menu, education, and then select trading strategy details, in which you will find the formula. Of course, it is a part of details of the strategy of the risk management. That's why it is in the strategy details. So that's all in this trading plan, and let's see how market behaves on Monday and Tuesday. So that's all. We'll try to keep you updated about it. However, it's not feasible for us to get on the YouTube and update all trading plans, but we keep giving you these kind of exemplary trading plans so that you can get an idea of how we collectively analyze the market and make our plans for the trading. So that's all. Thanks for watching.